How to trade stocks, ETFs by yourself. So some time ago, when I was younger, much younger, I had certain investment people talking to me, and they give what they call prospectus. And that prospectus, there are so many companies. I actually did not like to have so many companies. That was like extremely diversified. So maybe they know, but to be honest, some of those companies I don't like to have. And sometimes they put in prospectus companies that producing something for military. So suppose I don't want to have military stocks, or some might have stocks like hard liquor, some kind of, or certain chemicals maybe you don't like. Certain stuff in prospectus I don't really like. So, and later after some years I found actually anybody can trade whatever they do. They just invest in too many stocks, but you can invest much with much less stocks, and you can invest at the right time that you think is right, because just because you give them money does not mean it's the best time to invest, because sometimes stocks like this one, sometimes stock go down, sometimes up, sometimes go down. So this is E-Trade from Morgan Stanley. There are many companies. So basically you need to open an account. Okay. Now there is like US market or world market, global market. So if you are planning to buy something from foreign country, you would click on that. So with this one you can buy stocks. I don't do options. Stocks, I don't buy mutual funds. Now I don't buy anything, but I did try ETFs or stock. Now some stocks, what they call them, small caps or big caps, those small caps, it means it's a smaller company, but that growth can be much faster. Those like Apple, they grow forever. Like for instance, this one is Caterpillar. Caterpillar is like, they make, like heavy machinery, like excavators or different equipment like that. So if you look at chart, for instance, let's say 1 month, so you see it's, let's say, from 350 to, let's say, 375, so $25. Now if you look at 1 year, it just, you see for yourself the growth possible. Now it's 250 and then reach 350. Now if you look at 5 years, for 5 years, let's say 250, 350 for 5 years. So basically that would be growth for 5 years. This one, consider it safer as Forex, because there is no leverage. So it's not amplified kind of trading. Whatever you put, you don't have anything helping you. Like for forex is like kind of like you use bank's money, leverage. But this one, no leverage. It is safer, but the growth, expect the growth much less. With smaller caps you can have this difference much bigger. With big companies, this is quite big company, the growth is not that great. So suppose another big company, Apple. Okay, you need to choose this one. If you type the name, it will not recognize. This is like what they call ticket, right? Okay, so basically use this one. Now if you look at 5 years, so from 50, it's not bad for 5 years. If you look at all, oh no, so this, suppose 5 years, let's say 75 to 150, double, which is not bad, but you need to wait 5 years. Now what you do is, suppose you like this Apple and you would say buy. There are different platforms and there are different the designs a little bit different here and there. What you need to do is, if you wanna buy anything, you need to deposit. Suppose you have account and you need to deposit some money. You cannot trade anything unless you have money there at this particular platform and company. So this is a company. It used to be E-Trade, but from what I've seen, that Morgan Stanley bought E-Trade, the platform and company. So this Morgan Stanley is quite big financial company. So basically you need to deposit some money. You should have balance for you to trade. You need to have balance. Suppose you like Apple or anything. Now there is another thing, this one, advanced chart. If you like advanced chart, this advanced chart, it has, you see, like 10 years. See, so it has a drop. So suppose I like this 6 months. So you buy what some people say you buy low. So to me, like this movement, if I look here, it can be low. You don't try to buy on the top. You just wait for a correction, what they call correction. Correction means it goes up, 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 and then at some point go down. It's like steps, kind of steps. Suppose you like it. At this point, okay, it did drop from here to there, but if you look at level, sometimes it can drop to level, but if it's going up, most likely it will not drop to the same level. Some people believe in levels, certain levels, but honestly, to me, levels, it's if it goes up, like no big retraction at what level you look. So some like certain levels. Me personally, I don't look so much at levels. I can, but I don't need to. Levels maybe for Forex, because Forex is not like a company. They start a company, IPO, and then goes, and they have bankruptcy. But Forex is money. The money go forever, and bankruptcy with money most likely impossible. They do look at levels because they like stability, for loans stability. They might go with previous level or a touch more because of economic conditions. They might change the level. So anyway, you see it goes up and down, at certain point down, up and down. To me it's down, but if you believe this company will be okay, this is deep. You buy kind of on a deep. That's how I look. Now if you go to buy prospectus with many companies, they might invest right here, and after you invested, it go down here, and you will be like, what's going on? Because they don't really wait. They just, whatever you give, they invest. They're not gonna wait 3 months for the right time. So basically, suppose you like Apple, this look good, and you want to buy, for instance. You click on buy. Now it gives you how many shares. So this would be shares. Price type, either market price today, or I like honestly limit price. Limit price, if I see right now suppose if I see right now, what's the price? This is the price. So I don't like this one, but I like a little lower. Let's say 165. So I would put limit, and I put the price 165. It will go down at some point. It might hit, but I still save $3. For instance, I like even number. And now you put your price you want. Now, is that for today, or you don't mind to wait for a week or 60 days even? You put your 60 days. This limit price is kind of more advanced. Normally when people in the past, when they go to buy stocks, they usually place this one, instant market price. Whatever you see like this, you buy at market price. Limit is kind of more advanced, but you need to wait. I can put 160 and put here 160 and wait for put the price 160 and wait for like 60 days. I don't mind to wait. See what I mean? It's up to you. Some people, I don't want that because of those $18. No, because of $8. I don't want to wait. So you have market price. Market price will change this. You buy that price. And how many shares? Suppose 1 share. So as soon as you put 1 share, good for today, you preview order and buy it. Now in case of ETFs, I actually like ETFs. This is stock. Okay, stock is the company. Now if I like gold, you can buy gold, the company dealing with gold, that would be ETFs. So suppose, let's see, gold. Suppose I like gold. Oh no. Let's see this on gold. Okay, you see, this is ETF. In US, for some reason, you cannot trade gold many times. When you see Forex, it has no metals. But in Europe or Eastern Europe or Asia, you can buy or sell gold, metal like Forex. Now in US, you can do this one. You buy ETF gold. So, and they have those, you see, even Swiss, and it says the price. Okay, now suppose there is one famous ETF is let me see the I forgot the name. It's not Goldman Sachs, it's someone else. I think it's called hold on. It's too much of Golden Sachs. Suppose this one, iShares Gold Trust. Oh, this one, Invesco. Okay, suppose I like Invesco. Now today, honestly, well, this is China. Hold on, I don't know about China, but suppose this one. Anyone, you need to do research. There are a few companies. This is miners. There are a few companies. Some companies are dealing with excavating. Oh no. And some dealing with no excavating. Okay, gold. Best gold ETF. Okay, Spider, SPDR. Okay, let's see that one. SPDR gold shares. So why I do this? Because some of them excavating, they don't go like gold. Like right now, gold is going up, and the company dealing with gold should go up. But some of them have too much weight on excavation and not so much on reflected to gold price. So this to me reflected to gold price. And then what else? iShares gold. Okay, let's see another one. iShares gold. Okay, suppose I like this one. I should go. Okay, now it's kind of reflecting the price. So suppose you wanna buy, you buy. So this is ETF. It's not a company. It could have actually a few companies, a few gold companies inside of ETF, but all dealing with this gold. Suppose you wanna buy the same thing. Buy how many shares? Okay, this is share price 45. You buy this price type, either market execution or limit. If I put limit, I put price. Suppose I like to buy here. I hope it will hit here and go. So I can put like 40, a little less than 45, 47 maybe. So I put 47, 46, and then preview and post. And then if you forget this one, suppose I put 46. If you forget this one, to change to 60 days or few days, so whatever limit you had, it will be only for 1 day. You might think, oh, it will hit, I give 1 week, but you should have this one good for 60 days. Then for 60 days it will stay, otherwise it will cancel. So what else? Well, to me, I do like that particular advanced, like this chart, advanced chart. Some companies, okay, you can make larger. Some companies, they offer larger screen, I guess, chart. Okay, you can have larger like this. And then some of them allow indicators, stochastics or some indicators. If you don't like this one, you can always use alternative charts. Some people actually are relying on external charts. They don't believe this is the best, but it can be used. So suppose it's called bar charts. This one is quite famous. So suppose I want what? IAU. Okay. IAU. Okay. Now this chart would be, I personally like him better than many other ones. On this chart you can see more, and you can change. If you don't like this one, you can change to candles. Some like bars like that. Let's see. What is this? So basically this one, it costs money. Some good charts, they usually cost money, a little money. The free ones, they are not really the best. So on this chart, okay, 20 years performance. tools. I like tools. Suppose I like trend line. So you can use tools for trend line. Shit, what is it? Yeah, you can have tool. Anyway, you can move this. Okay, anyway. And then you can have indicators, but I think you need to log in. So what you do is basically you can use this one, or you can use inside. It's up to you. $45.08. This says 11. Anyway, that's how it looks. I don't buy usually any kind of options. And then whatever you buy, any stocks, ETFs, it would be one portfolio. It comes under one portfolio. So some stocks you might make money, some lose, some have bankruptcies. So you don't pay tax on one stock, you pay on portfolio, because other losing, and at the end you have like certain net or profit or loss. That's all I can say. You have a good time. Happy trading if you trade. Bye.